Volatility. So volatility isn't necessarily a cause of success, but you can certainly use it to your benefit if you understand it. And the first thing I'll say about volatility is it's not just a volatile price over time. It's also a volatile price over space. Let's take a look here. We see a disconnect between the East and the West. This comes from the Ape of Gold Street. We've just entered completely uncharted territory in silver. A $6 premium between Shanghai and the COMEX has simply never existed before until now. China just settled silver at $77 while the COMEX trades at $71. Historically, this spread barely moved beyond $2 because arbitrage kept prices aligned. A $6 gap means that mechanism is no longer functioning. At those levels, COMEX and LBMA are effectively broken. The incentive to pull physical metal out of COMEX and into Shanghai is massive. And he's absolutely right. There is a huge incentive to do this, but there's a lot of friction to actually getting it done. So while a $6 spread is massive and creates huge profit opportunities, arbitrage opportunities, it's not necessarily easy to close that gap and execute those trades. But $6 isn't as wide as it gets. From Silver Trade, with silver surging to nearly $88 per ounce in Shanghai, the China silver premium has stretched to $9 an ounce. So this tweet here is mostly centered around price manipulation, which is a topic for another video, but the point I want to make is that the spread widened to $9 an ounce and got even wider than that. So when there's a huge dislocation like this, we can think of it as space volatility, and you can use that to your advantage either by making a trade directly or simply by understanding how the market is working and just holding through the whole thing. Don't get scared, don't get shaken out. Stick to your strategy and hold your position through the volatility, because ultimately things will gap up and anyone who holds through it will be rewarded. Here's one anecdotal example of what's happening behind the scenes. This comes from CNBC. 2 Chinese companies contacted a Canadian-based silver company on Friday, offering to buy physical silver at about $8 more than market price at the time, according to the CEO of that company. He said one company was a manufacturer and the other was a large trading firm, which is interesting. So not only is the offer to buy silver $8 more than market price interesting, but the fact that it's coming from 2 different companies in 2 different industries. So if they were both manufacturers, that tells a different story. If they were both trading firms, that tells a different story. But we're seeing one of each, and where there's one, there's more, okay? Also, an Indian buyer approached that same company on Monday with an offer $10 above the market price, he added. Okay, so two offers for $8 more from Chinese companies. That's on Friday. The weekend goes by. Then on Monday, $10 above market price. So this is kind of unbelievable. And again, this is just one very small sample size. If it's happening here, it's probably happening in many, many, many places. So massive volatility. Another point of volatility I want to mention is this here from the Kobayashi letter. This is incredible. The double leveraged short silver ETF, ZSL, saw a $111 million inflow on Tuesday, the largest on record. This was followed by a $60 million outflow on Wednesday, also the largest on record. So you can see here how absolutely massive this is compared to what it was historically. And by the way, this is a 5-year chart. This isn't like 30 days or something. This is 5 years. And we have an absolutely humongous inflow and outflow. So hugely volatile into an ETF that is itself a volatile ETF on top of a metal, leveraged double on top of a metal that is already very volatile. So this is volatility inside of volatility on top of more volatility. Silver is set for much more volatility. So buckle up, boys and girls. There's a lot more volatility in 2026. And where does that leave us? Well, I think that silver is going to be at the top of the list of best investments of 2026, just like it was for 2025, because there's a massive shortage of physical silver. There's a tiny amount left, and so many people want it. So there isn't much there, and that brings us to the meme of the day. And it's gone. The US government has just declared silver an issue of national security. Silver and 40 other critical minerals are the subject of the latest White House proclamation, which came out yesterday. In this video, I'm going to tell you what it says, what it means, and how you can profit. Let's take a look at this proclamation here, and we're going to look at it in two pieces because that's how it's framed. The first piece is a description of the situation that the United States is in, and then the second piece is action steps of what to do about it. Okay, so let's look at the first section here. On October 24th, 2025, the Secretary of Commerce transmitted to me, to Trump, a report on his investigation into the effects of imports of processed critical minerals and their derivative products, okay, PCMDPs, on the national security of the United States, and advised me of his opinion that these minerals are being imported into the United States in such quantities and under such circumstances as to threaten to impair the national security of the United States. So this is the framing here, the first section. The processed critical minerals and their derivative products are being processed and imported into the United States in a way that threatens national security. So this is the first piece, and there's a handful of pieces we're going to look at. And by the way, if you missed the latest video we posted on this channel, we mentioned, among other things, that silver was designated a critical mineral by the US government last year. Okay, so in that video that came out just a couple days ago, I mentioned 5 trends that are shaping the silver market, and it just so happens that in this proclamation we're looking at in this video, 4 of those trends are referenced throughout the proclamation. So if you haven't seen that previous video, definitely go back and watch it. It's going to be relevant for all of 2026, and it's certainly relevant for this video here. So continuing here, the critical minerals are indispensable to almost every industry, including national defense, critical infrastructure, advanced weapon systems, energy infrastructure, everyday consumer goods, electronics, and vehicles. I read a list like that and I think silver. Silver is used in basically all of them. And if you're doing anything electronic, what are you going to use to conduct electricity? Well, probably the best element on the periodic table for conducting electricity, and that is silver. Silver is the gold standard when it comes to electronics. It is the standard against which everything else is measured. So silver is absolutely critical in all of these industries. But of course, it's not just silver, okay? As of 2024, the United States was 100% net import reliant for 12 critical minerals and 50% or greater net import reliant for a further 29 critical minerals, okay, so a total of 41. Even where the United States has domestic mining capacity, the United States lacks the domestic processing capacity to avoid downstream net import reliance. So even though you can mine something in the US, you can't always process it in the US, and that's part of the problem here. So if you mine something, then you have to ship it overseas to process it. Well, it might as well have been sourced overseas to begin with. And you could see here a list of the net import reliance and major import sources for certain minerals. And this, unfortunately, is a year older than what we were just looking at, so the list doesn't line up exactly, but it gives you a general sense of what the US is reliant on. These blue bars in the middle are basically progress bars. If they're filled up all the way, that means the US is 100% reliant on foreign sources. And further down the list, you can see it dwindles down to about 50%, and then it cuts off. So all of these minerals up here, the US is 100% reliant on foreign sources for. And down the list here is silver at about 69% imported, and the remainder is domestic. Continuing, demand for critical minerals is rapidly increasing and will continue to increase. Yes, growing demand. We talked about this in the previous video. Growing high-tech industries such as artificial intelligence, data centers, nuclear energy, and new energy technologies. Yes, all of which require silver. And, going back a second, the Secretary further found that critical mineral markets are prone to price volatility,